In this video, I'm going to show what Bollinger Bands are. Bollinger Bands are a technical analysis tool. It tells you the stock price movement and plots it against 1, 2, or 3 standard deviations. So the way you activate any technical analysis tool on the Thinkorswim platform is you come into studies, you want to add studies or edit studies, you can do either one. And we're going to add this study. And when we add the study, it automatically has some default values. So what it does is it's going to show you 2 standard deviations down and 2 standard deviations up. So we're going to leave it at that and see how this looks on the graph. So what this is, the lower band is the -2 standard deviations and the upper band is the +2 standard deviations. Let me actually just correct the colors a little bit. The lower band is 2 standard deviations below the price. So if we look at a closer chart, what I'll do is I'll make it a 3-month chart and a daily chart. The statistical definition of a 2 standard deviation move says that 95% of the time the values of the data, in this case it's our stock prices, the values of the data will fall within the 2 standard deviation range. Which means on the flip side is that whenever it goes outside of the 2 standard deviation range, it will go only about 5% of the time. So here we are looking at a 3-month chart of Google. And you can literally see that the number of times that it goes outside of these 2 bands is here we have 1, here we have 2, here it goes out but it comes back in to close, and here again it goes out but it comes back in. Here we have a reading outside the band, and here also we have a reading outside the band but it closes inside. Here again we have a reading outside but it closes inside. So you can see that the 2 standard deviation move is pretty accurate. So 5% of the time the stock is going to go outside of this range. And so now how does this help us? It helps us because once you plot a stock price and you plot the 2 standard deviation Bollinger Bands around it, then you can see that if whenever it goes out of the band, it's more likely to come in. So, some sort of a reversal is possible. Now, in this case, it actually just went flat. So it went flat for the next 3 days. But here you can see that it clearly came into the band and it had a reversal. So the Bollinger Bands are very helpful if you can think of it as reversal points or as a potential reversal point. Now again, if you're unlucky, you could be in that 5% range when it remains outside of the band and doesn't come in. But for the most part, you'll see that whenever the stock price goes outside of the 2 Bollinger Band, it's more likely to come back in. So here we see that it went flat. Here we see that it clearly came back into the band. So this was a very good reversal point. And here also it came back in and it was a reversal point. So 2 out of 3 times it worked out very well, and the 3rd time when it didn't work out very well, it just went flat. What would be helpful is, whenever you see a stock going outside its 2 Bollinger Band level, you can wait for the next reading and see what it does. If the next reading also is outside the 2 Bollinger Band, then sometime right after that you can expect it to come back into the band. It could signal to you a reversal pattern. All of these studies have default values. So in this case, it's a -2 standard deviation and +2 standard deviation. But if we come to the edit studies panel again, and if we look at that, you can actually change this also. So we can say, let's do it to 2.5 standard deviations. So now if you put 2.5 standard deviations and we apply that and look at it, now you'll see that you'll have even less points outside the band. Now this point, this particular day, this trading range here, you can see that it actually comes inside the band. So if you want to get very clear signals, you can probably put it at 2.5 standard deviations. And if you do that, then what it's telling you is probably about 97 to 98% of the time, all price movement will be inside the 2 standard deviation band. So Bollinger Bands, I find it very helpful because it can signal to you overbought or oversold conditions. And if not on the next trading day, maybe in the next day or two, you should see prices come back into the band. So it's actually quite helpful to view the Bollinger Bands and see if you want to take a reversal trade. So here, if you were long, if you were bullish and the stock went up all the way till here, you could potentially sell your position right here because it's gone outside of the band. And if you did sell it there, then you would be locking in a profit. Similarly, if you come to this point and said, okay, if it's going to go below the lower band, then perhaps I need to go long here. And if you did go long, you could have caught about a $10 move on Google right here. So Bollinger Bands are very helpful. Bollinger Bands are part of the technical analysis arsenal. Thanks for watching this video. I'll see you in the next video.